Okay, everybody. Want to take this opportunity to welcome all of you. It's our first ever happy hour. I kind of like that title. It's an impromptu event. Tom and I were talking over the weekend. Got a lot of stuff going on the EarningsBeats. Got a lot of new members. Tom's first official day starting as Chief Market Strategist at EarningsBeats. And even though we had a session last week where we unveiled some stuff, we've actually started putting a couple of things into practice, and I thought it would be well worth spending a little bit of time going over some of these new services. There's a lot of people in the room, a lot of you new to EarningsBeats. I'm going to be very brief because I want Tom to spend some time, and then we'll have some Q&A. This isn't a stock picking or stock question session, really about the service, but I think the things that we've implemented you're going to find very useful. For those of you who are brand new to EarningsBeats, let me just say very quickly, Tom Bowley and I go back 30 years, and we started a company called Invested Central in 2004. It's a one-page newsletter about the market. And then, about 5 years ago, we changed our methodology. And our whole philosophy is to get involved in stocks that have strong earnings, strong charts, strong relative strength. And you'll see that when Tom takes some time to talk about some of the things that he'll be doing at EarningsBeats. So back in 2015, Tom started working for StockCharts.com as a senior technical analyst. And now we've gone full circle and he's come back as our chief market strategist. And what's so neat about that is that Tom has such a deep understanding of how stock charts works, and he's got a deep understanding as a founder of EarningsBeats, how EarningsBeats works. So it's really a great combo. And the whole idea is to really marry what we offer to the tools that StockCharts.com offers as well. So I want to just go over a couple of things real quickly before I turn it over to Tom. This is just a little page here about our service, and I have to tell you, this is going to be updated some because we've even added features since we updated this. But let me just say that the membership includes access to our top 10 stock picks portfolios. These are stocks that Tom every quarter deems to be his top picks in 3 different areas: model, aggressive, and income. There's 10 stocks in each portfolio, 30 in all. And those stocks are meant to be held during the 30-day period, 90-day period. So these are not stocks that are traded on an active basis. And maybe he'll talk about that a little bit more later. You also get access to our exclusive strong earnings chart list. Companies that have already beaten revenue and earnings expectations, stock charts showing support breakout levels, and stocks that could provide high reward to risk returns. And let me show you just really quickly what this looks like. It's our strong earnings chart list. Got 329 stocks on the list right now. Most recent batch added just last week. We added a group of stocks. So remember that we scan the market every day for stocks that beat earnings expectations, and we update this list throughout the year. I think last year we had 16 updates, about 1,000 stocks came on and off the list, all various sizes and shapes. Here's what a chart looks like. You see a couple of horizontal lines here. Here's a breakout. Look at this beautiful move on Zoomza, ZUMZ. These become support and resistance levels, and every single chart is annotated to give you an idea of where it might make sense to actually get involved with the stock. Now, in addition to our strong earnings chart list, which is really a big part of our service, we have what's called the Relative Strength Industry Group Chart List. 104 charts that Tom put together. It's an exclusive to EarningsBeats members. So every industry that's represented, we have a chart. And the chart shows the relative strength of that particular group. Very powerful to match that with our strong earnings chart list so you can come up with the best of the best stocks. That particular part of our service is reserved for annual members because it's a one-time chart. It's a one-time list. Once you get it, you've got it, forever. And it updates on a real-time basis. So unlike our strong earnings chart list, which we update continuously throughout the year, this is a one-time list, and that's why we limit it to our annual members. I'm just going to show you very quickly, because this is really neat, right? But Tom's going to talk about this today. This is our first daily market report since Tom joined us. It's very extensive, and he's going to go over it so you get an idea of what our members get on a daily basis. I was looking at it today, and it's awesome. So happy to have this right now. I want to mention also that we have our webinars like today. We've got a nice little archive we started. And every single event that we have is recorded. So you can go back and listen to it as many times as you want. And I love to point to this particular webinar, The Power of Relative Strength, that Tom conducted a couple months ago. If you want to understand and learn what relative strength is about, you become a member and you listen to that, it's going to really, I think, have a major impact on understanding the whole concept of relative strength. That's available to all of our members. A couple of other things here. If you go to EarningsBeats.com, you'll be able to follow along with me. We added recently a frequently asked questions section, which obviously is very helpful for people who either don't know much about us or are members and are trying to figure out everything about our service. Also, you'll see that you can join and get a 30-day trial for $7. It's a great way to really get to know us. And I want to mention one thing. I got a couple bonuses tonight, and I'm going to turn over to Tom in just a minute. But one thing we're going to do, this is normally 30 days. We're going to add 2 bonus weeks if you sign up by tomorrow. I would normally say tonight, but there will be some people listening to the recording. So let's say if you sign up for this by tomorrow, Tuesday, you're going to get 2 bonus weeks. And the significance of this is that on the 21st of October, which would be included in your trial membership, we're going to have one of our quarterly earnings webinars. Those are very popular. So October 21st, after earnings season has started, Tom's going to come in. He's going to go over a bunch of stocks that already reported and look at potential setups. But in addition to that, we'll be talking about companies that have earnings coming up that could be getting ready to take off. So if you sign up now, you'll get 2 weeks bonus, 6 weeks instead of the normal 4. And that'll get you in to that webinar, which is, I think, going to be awesome. Then the last thing I want to share, this is always popular. And you'll see it, you go to our site, EarningsBeats.com at the top, the happy hour special link. You sign up by tonight, you'll get the best deal because I'll throw a bonus month in. You get 13 months instead of normal 12. And this is everything you get. The things that I've talked about, you can take a look at this yourself by going to that link. This is quite a bargain for everything that we offer over the course of a year. And maybe I'll stop by a little bit later and tell you a little bit more about it. But you can go right to EarningsBeats.com, happy hour special, and then you'll be able to see what I'm talking about. Okay. I just wanted to go over those couple of things with you. You can search, look for the site. We're going to be making some new enhancements to the site as well over the next few weeks. Remember, Tom just got here, so there's going to be some things that we'll be shifting around, adding. And what I wanted Tom to do tonight, in just a little bit of time, is I wanted him to really focus on a couple of things, and he can talk about whatever he wants. But I really wanted him to talk about the new daily market report that we started, and he can quickly take you through the sections so you can see what you get as a member. And then if he has a few minutes left, he can talk about the relative strength industry group matrix that will be a new part of the service. It's not listed on here as shown, but that's also going to be available to our members. Anyways, on that note, I said I'd be brief. I think I have been 10 minutes. I'm going to bow out now. Tom Bowley, again, a lot of you know him from stock charts. A lot of you know him from EarningsBeats. You don't need much more introduction. I'm going to stop sharing, turn it over to my partner, Tom Bowley.
Okay, thank you, John. Yeah, really looking forward to tonight. Today was a pretty special day because I did write today's market report. It's been a long time since I've done that for EarningsBeats, probably about 4.5 years and counting until today. So that was pretty cool. It went out later than what I anticipated going out in the future. It didn't go out probably until about 1 o'clock Eastern. I would anticipate that it will probably be to you between 11 a.m. and noon going forward. There was a lot of things going on. I mean, just with it being the first report, trying to get a lot of things packed in. You probably saw there were a number of charts included. Hopefully everybody that, all the members that are in here that did get the report, love to get your feedback, by the way. I mean, you can post it here and it'll be, reported to me later, or if you want to send me an email, my email at EarningsBeats is tom@earningsbeats.com. That's easy enough. If you have questions, I mean, obviously I don't have time to answer everyone's individual stock questions. I mean, that would take up a tremendous amount of time. But if you have some thoughts about the service, maybe if there's something in the daily market report that I haven't touched on that you would think would be of value, not just to you, but maybe the entire membership base, those are certainly some emails I'd like to get from time to time. That would be awesome. But let me go ahead and I want to show you first the report that I sent out today. So today's daily market report. So first things first, let's let me see here. Hopefully, can you see this, John? Just want to make sure everybody.
Yep, looks good.
Okay. Now this just is coming through my email. So this is how hopefully everyone saw this. One of the things that I wanted to add was just a quick executive market summary. I mean, some of you may have time to spend 20, 30 minutes, going through the entire report. Others of you may be at work. You may be really busy, and maybe just glancing over some of the executive market summary may be good. So I just put on, looking at some of the news items of the day, looking at what's taking place in the market, just some of the things that are really standing out to me as I look at the market, just to give you really quick bullet points, so that if nothing else, you have a general sense of what's going on in the market. So I started off with the market summary here, talking about the Dow Jones, or the executive summary, talking about the Dow Jones and the S&P being down. They nearly got to record highs recently, but they were down a little bit. Nothing alarming, but they were down. Wanted to point that out. Small caps, the Russell 2000 was actually up at the time and did finish higher today. That was important to me because we have seen small caps lagging for quite some time. They seem to be perking up here recently with the 10-year Treasury yield moving up and with some other areas moving up. But 10-year Treasury yield, if you look down here, was actually down today. And yet we still saw relative strength from the Russell 2000. So I thought that was important. Obviously, the drone attack in Saudi Arabia, the oil fields being hit, energy was in the news all day today. Energy obviously led all the sectors higher because crude oil prices surged. They were up at one point when I was writing the report, 12%. I don't even know exactly where they finished, but I do know crude oil prices were up significantly because of that attack. Here, 9 of 11 sectors were lower at the time. Materials were weak today. Consumer stocks, both the XLY and the XLP, discretionary and staples, both were struggling throughout the day. Transportation stocks were weak. That's somewhat understandable. Oil prices were surging. That has a negative impact on airlines. The airlines were down quite a bit throughout the day. And then, of course, there's your treasury yield. So that was just a really quick and dirty. Not a whole lot going on right now with earnings reports. It wasn't a whole lot in terms of economic reports. So just wanted to focus on some of the things I thought were important. So that was the executive summary. So maybe if you're really busy and you see the report come in, you're like, oh my gosh, I don't have time to look at 10 charts and, all these different things that Tom's talking about. Well, maybe just a quick read of the executive summary will give you something, to take away. And keep you posted on what's going on in the market. Then I went into an market overview, very brief. This may build out over time. I just wanted to point out a couple of things. I'd mentioned the S&P 500 was down. You can see that it's down, but here on this chart, you can see the first area of support. And this would be very, very short-term support. But since we started rallying at the end of August, notice that we have stayed above the 50-hour SMA. And notice that 50-hour SMA is coming in right at price support here. So I just wanted to point out short term with the market down, moving down to about 29.90 really wouldn't be that big a deal. It's just normal breakout and backfill to where we broke out from. If you look at the actual chart today, take a look at where we went down to today. Today's low is 29.90. It was right at that breakout level. So it was just a way of letting you know that, hey, short term, it's okay going down to 29.90. That's all we did. Started to bounce off of that. I don't really see anything, to be overly concerned about. I mentioned in the report, the headlines today, oil prices surging, chances of global recession increasing. I'm like, really? We're just getting over all the trade war related recession stuff that the media is trying to put in everyone's head. Now we get one spike in oil prices, and now that's going to take down the global economy, and we're all going to be in a recession. I'm not saying it can't happen. I'm not seeing signs of it happening. You don't sit near all-time highs when you think the world's falling apart. Trust me, if the world was falling apart, the stock market would be reflecting that. It's one of the most accurate forecasters of economic activity out there. It's a tremendous leading economic indicator. So when I see the S&P 500 late last week at 30.20, about 10 points from the all-time high, I'm really not interested in hearing about global recessions and how the inverted yield curves, which, by the way, now has righted itself, so the media isn't talking about that anymore. I just think that media outlets are looking for ratings. So you're going to see those headlines trying to get people to click. And that's what gets people to click more than anything: fear, recessions, crashes. So you're going to see those in headlines. I tend to look beyond that and try to look at what's going on in the market. I believe we are in a secular bull market. I'm sure I'll be writing quite a bit about that in the daily market report from time to time. But I believe we ended a secular bear market in about 2013 when we broke to new all-time highs. And that started, in my opinion, a secular bull market, which tends to run for about 17 or 18 years. So in 2019, as far as I'm concerned, we're still in the very early stages. Maybe inning 3 or 4. 3, I'm going to say, of a 9-inning game here. Can we have corrections? Yes. We had a big one back in December, 20% in 3 months. That's pretty big and scary. Cyclical bear market in a secular bull market. I think we go higher. But anyway, this was just a chart just to show you in the short term some things to keep in mind. If we lose 29.90, do I think that's the end game for the bull market? Of course not. It probably means that this short term uptrend that we've seen for the last month, well, a little less than a month, maybe 3-4 weeks, that is probably going to come to an end if we go through 29.90. I think maybe we'll see a little bit more consolidation. Maybe September will live up to its name, and we could see a move back down into this gap support zone, which would be another 50 points lower on the S&P 500. Again, I'm still not looking for anything huge to the downside. I will say historically, September 20th through the 26th is the worst time in the month of September. That's going back on the S&P 500 almost 70 years to 1950. The results back me up on this. Doesn't mean it's going to happen this year, but you should be aware of it. The 20th through the 26th. And by the way, the 20th this year, that's the third Friday of September. That's option expiration Friday. That's normal for the market to pull back after options expiration anyway. So I think as we get closer to the end of this week, that's when we want to be thinking about, okay, historically, things are rough. Let's take a look, see where the charts are, and maybe it would make sense in our trading accounts to pull back a little bit. All right, so let's keep going here. Talked a little bit about that drone attack on Saudi Arabia's oil facilities. The energy shares rising. The XLE was up pretty big earlier today, and pointed out a couple stocks on the S&P 500 that were top performers. Then I moved into sector industry focus. If you've been a reader of my Trading Places blog for the last 4.5 years, I had a sector industry watch. Pretty much the same thing, although when I was writing the blogs over at Stock Charts, I really was encouraged. All of us that were writing blogs over there were encouraged not to put too many charts in to our blogs. So kind of like 4 to 6 was kind of the norm. In today's market report, you saw 10. Here in just this sector industry focus, there were 3 of them. Here you can see the airlines. I thought it was worth mentioning what was going on with the airlines. With crude oil prices jumping, airlines were getting hit. But I mentioned, hey, you know, we've got the PPO looking really strong here, breaking above centerline resistance. Normally when that occurs, we want to watch that rising 20-day moving average, which has been providing some good support. It provided support a little over a week ago. We went down, hit that 20-day, bounced right off of it. So we were coming down today, potentially getting close to that 20-day. Well, the way the day worked out, we did bounce right off. Well, didn't quite get all the way down to the 20-day. Got very close, though. Bounced strongly. Airlines are fine. Yes, they took a hit because of the news coming out, oil prices surging. Of course, that's what they're going to do when oil prices go up as much as they did today. But you can see the reaction back to the upside. So it was an opportunity. That's the way I think the market was interpreting it. So that was airlines. Going down, I wanted to mention banks. Why? Well, banks had gotten up to a very clear area of resistance, right at about 465, 466. You can see the close that we, or the action that we had on Friday. Today in the yellow highlighted area, that's telling you intraday, that's what's going on. So after getting right back up to this resistance areas on the banks, moving back down. So how does that impact you? Well, if you're trading banks, might not have been a bad opportunity to take some profits depending on the look of your individual bank chart. But banks in general hit a major overhead resistance. I think they're going to go higher, but a lot of times they'll at least pull back. Let's watch this rising 20-day. We're getting that golden cross, the 20 going over the 50. So what did the banks do today after pulling back? They actually came back pretty strongly. Look at all these hollow candles. That to me is accumulation. The last time moving up, you can see a lot of these red-filled candles as we got up close to resistance. That tells me maybe a little distribution as we're getting close to resistance. These are almost all hollow candles. I think banks are going to break out. Now, does that mean that I would be jumping in right here at resistance? No. I'd like to see an actual breakout. I would prefer, a little bit more short-term weakness, get down close to that rising 20-day. But, hey, maybe it doesn't go back down there. We may just simply go right through resistance. If we do, it would be very bullish. Next chart that I mentioned in the sector industry focus, soft drinks. Now, soft drinks had been down earlier in September. We bounced and we were coming back down again today. But notice this is right where we had a lot of overhead resistance. We broke through, broken price resistance becomes support. So I just wanted to point out that it was down today. You can see it was down almost 1% at the time, 746. getting down close to some key price resistance. So what did the soft drinks do today? Well, we went down even below. We went down to 744, but we came back up and we held 747. So we held the area of price support, 747. Going back to this chart, you can see we were at 746 and still hanging right at support. So 747 was a good close there. So again, just taking a look at some quick charts, things that make sense to me. The beauty of doing it now in the middle of the trading day as opposed to trading places, which was before the trading day, is that I'm actually able to give you some of these charts in real time, which I think can be much more beneficial if you're an active trader. Now, if you're someone who doesn't actively trade, there's still going to be plenty in the charts looking at the S&P 500 and the Dow, looking at the overviews, taking a look at the big picture, the secular bull market versus bear market. All of those things are going to be good and useful for longer term investors. So I think there's going to be things for both throughout the service, but especially here in the daily market report. So then I got into strong earnings chart list. And the idea here is, and if you're new to EarningsBeats, this is really one of the building blocks of what we have at EarningsBeats. It's really part of the foundation of our service. The strong earnings chart list is something that's developed throughout the quarter. It is continually updated, maybe every week to 2 weeks. New stocks will go on the strong earnings chart list. Old stocks that are getting ready to report over the next few weeks will come off of the strong earnings chart list. So it's an ever-changing list. If you are a member of EarningsBeats and you are also at least an extra member of Stock Charts, we will send you a copy of this list. And I cannot tell you how many hours of homework that this will save you. What I do is I start over at Zacks and I look at every company that beats revenue estimates. And then I go and look at the earnings estimates and see if which companies beat both revenue and earnings. That's kind of how this whole list gets started. From there, I look at the charts. Once I know that a company is beaten top line, beaten bottom line, and I pull up the charts on those companies and look for two things. First, I want to make sure that the volume is adequate. So I don't want illiquid stocks. I don't want stocks that have beaten top line, bottom line, and trade 2,000 shares a day. That, to me, is just a recipe for disaster, because stocks that don't trade much, they're not profitable for market makers to make a market in those stocks. So when you get a stock that's very illiquid, chances are you might have one or two market makers that make a market in that stock. Very small market makers. And how do they make money? They don't make it from volume. They make it from the manipulating of prices. They trade those stocks. And when you're one of only, one of two market makers on a stock, you basically control the action. It is like being at a casino and knowing which card's going to come up next as the dealer. It is just crazy the advantages they have. I have no interest whatsoever trading stocks that are illiquid. So I make sure that the stocks are liquid. By liquid, I look for average volume to be around 200,000 shares or more. If I was doing it for myself and I didn't have a service, maybe I would look at 100,000 shares or maybe even 75,000 shares. But I use 200,000. I think that makes these stocks liquid enough for our members to be considering them. So within the strong earnings chart list, and I'll show you that chart list in just a bit, I run scans, and I plan to run scans every day and give you results of scans. So here what I did is I ran a sample of new 52-week highs, but I applied that only to our 329 stocks that are currently on our strong earnings chart list. So that chart list right there is what I use in our scan. So yes, I look at 52-week highs, but I only apply it to the strong earnings chart list. So let me show you. let me show you here. If I come down and I've got my scans down here. So what I'm going to do is I'm going to grab one of my scans. This is a SECL, a strong earnings chart list, 52-week highs. So I've already got it there. And so what I can do is just simply run the scan. And 14 of them, now there were 5 when I did this earlier in the day. There were 14 out of 329 stocks, or just under 5%, maybe 4% of the stocks hit new 52-week highs today. I'm going to be bringing those to you on a regular basis and telling you which ones. EverQuote is a big one because although I'm not going to go over portfolio stocks today, those of you that are members know that this is in one of the portfolios that we currently have. And so when I see one of these coming up, it makes me particularly happy. Lockheed Martin, another one that's in the one of the portfolios you can see coming across, setting a new 52-week high. So it's a quick way for me to see portfolio stocks that are also breaking out to new highs. But EverQuote, if I bring the chart up, look at the day that stock had today. 2473. It did close above that prior high candle body. So right here, 2463 was the open, 2421 was the close. I wanted to get a close above the highest open or close that we've had on the stock, which is 2463. And today we closed at 2473. Look at the volume pickup. That is what I like to see. I like to see get a breakout and to also see increase in volume on that push to the upside. So of course, when I was going through here and I went down to the bottom, DRQ is one that I mentioned here. Actually, let me see here. Keep scrolling down. And NTRA, I thought I had, EverQuote at the time, never mind. EverQuote was not in, at the time, was not setting a 52-week high. It was in the scan that I ran for high volume intraday. So, and that's a good sign because or a good signal because that can be confirming a big technical move, a breakout, if you will. So EverQuote was one that I mentioned here because it was trying to make this breakout. There was that price resistance that I was providing, 2463. I wanted to see the stock close. And you can see at the time, it was 2442. So it hadn't made the breakout. But later, it went up over 25 intraday and closed at 2473. So as you know, if you're trading the stock or if you own it because it's in one of the portfolios, this daily market report is going to be designed to try to keep you up to date on some of the stocks that are making noise in the strong earnings chart list or in the portfolio or both. All right. Now let me move back up here because the EverQuote was not in this particular scan. This one was, at the time, was just showing you 52-week highs that were on our strong earnings chart list. There were 10 of them. And 2 of them in particular I mentioned. One, Drillquip, DRQ, because it was in the energy space and energy was having such a big day. So let me go over and see. I don't even know how DRQ finished today, but let's see if it managed to hold up. Oh, yeah, made a huge move. So when I mentioned it here, it was 54.81. By the close, it was 55.42. And I mentioned in here that I think breaking out above these prior highs is probably going to lead this stock up to about 58.5 to challenge the overhead resistance that we had all the way back in July of 2018. Also, I would have liked to have seen more volume. Well, the volume did pick up later in the day. So you can see the volume was probably the heaviest that we had seen in over a month, probably in about 5 weeks. So we did get the confirming volume, and we did get that breakout. Again, that was an early warning, pointing it out early in the day. Also, NTRA was trying to break out of an ascending triangle. I haven't looked at that one again. So let's pull this one up, NTRA, and let's see if we got that breakout. We did. We confirmed the breakout. Look at the volume picking up. So again, it was another one alerting. We finished 33.77. At the time, we were 33.55. So it did finish stronger, and it did make this breakout of an ascending triangle. So these are the types of things that I want to be able to not only give you the strong earnings chart list, but then I want to try to provide some of the things that are really looking interesting to me, showing you the scans, showing you the results of the scans, and then finally showing you the actual charts so you can see what I'm looking at. Monday setups. Now, I only did one today. I'm going to have more going forward. Sometimes they might be breakouts. Sometimes they're pullbacks. I really like buying stocks when they get cheaper. Call me crazy, but I like stocks that cost less. Nowhere else in the world does it make sense to say, wow, that house keeps going up and up. Let me go buy it. Or you go to the mall and you say, wow, that suit last week cost $200, but this week I can get it for $350. Wow, what a deal. Let me jump on it. We don't do that anywhere else. So what's the fascination behind jumping into these stocks when they've gone up for 10 straight days? I don't get it. Yes, they're in good shape technically. Yes, we want to put them on our strong earnings chart list, but we don't necessarily want to be jumping on board, especially as traders. You know, the portfolios are a different animal, and you really shouldn't be thinking of the portfolios like you do the strong earnings chart list if you're trying to trade, actively trade. When I'm thinking about actively trading, I want to get stocks in pullbacks before they make another push to the upside. So I just simply pointed out RMD has been down for most of the last week and a half, 2 weeks almost, and it was down to 131. Here was a key area. Look at the volume that picked up here in the second week of September, and that hammer that printed. Buyers came back in at about 130 and a half. And if you look over here, there were about 5 days in a row, right at around 130 and a half, 131. Those were the lows of the day. Now, if we break down, we're in September. There's nothing saying this stock is absolutely going to turn at 130.50. So I pointed out the next key area. Look at the big move over here in July with earnings, the big gap up, and then the pullback. Look at these other pullbacks. 125 was a great entry. So if I'm looking at this and I'm trying to strategically build a position, and I'm looking maybe at 141 as my target, and 125 is kind of like my final line in the sand to the downside, then maybe it makes sense to buy around 130 and a half and again at 125, giving me an average entry price somewhere around 127 and a half, 128, something like that. I could have a stop maybe around 124, a target of 141, and then all of a sudden I have probably a 4-to-1 reward to risk ratio on this trade. Now, if it only goes down to 130 and a half and never makes it to 125 and turns back around, you only get half your shares. But, I mean, you're still making money. What's wrong with that? And if it goes down to 125, you get in a second time, so you're able to lower the price. It just, to me, you know, for those maybe who want to take a little bit lesser risk, then maybe using 2 entry points makes sense. Those who, you know, are looking for immediate results might get in at 130 and a half. If it closes below 130, you get out. Maybe even intraday. You might say, you know what, I'll give it 1% to the downside. That's it. And then I'm out because I don't want to hold it till it gets to 125. And you could still use that same target up at 141. Different strategies for different people. Completely up to you. But anyway, I thought that RMD, you know, I hadn't looked at RMD, so let's see what that one did today. I don't even know where it finished. Went down to 130.71, the low 130.53, sitting almost right on its 50-day moving average. So just pointing it out, it may interest you, it may not. You may not, like I said, you may not be a trader. If you are a trader, you still might not like the stock for whatever reason. Maybe you don't like healthcare. Whatever. Just wanted to point it out in there. Now, we've got a pretty confined list of stocks that we trade, strong earnings chart list. This whole section here, today's movers, is really designed to look at something else. So if you're somebody who says, well, you know, this is great having strong earnings chart list, but what, you know, are there some other stocks out there that I could be considering? I mean, that maybe have a tremendous reward to risk. Well, this was one that I pointed out today that I think carries a lot of risk, but it also carries potential for a big return. This stock went up on massive volume, 5 days in a row. Look at the volume pick up. Now, it is not normally a heavy volume stock, probably normally trades a couple 100,000 shares a day, but you can see 5 days in a row, the volume picked up, and look at what this stock did. Ran from $6 to 13.5. I did not go back to look at the story. I have no idea if this was earnings related. I don't know if they came out with the greatest thing since sliced bread in terms of getting something approved by the FDA. I don't know what it was. All I know is based on the price action, we took out an important level here at $8, and now after a huge move to the upside, many times when these stocks pull back, that rising 20-day moving average can be a great entry point. So I just simply pointed out 2 key areas. The stock's getting battered. Maybe it's something you might be interested in. It was 926. I don't know where it is. Let's see where it finished today. It finished at 917, got as low as 904. So it still hasn't gotten down there. Maybe tomorrow's the day. Maybe a couple more days. 850 down to this $8 price support area. That kind of makes sense to me on this stock if you're willing to take on considerable risk. If you're somebody who likes to trade Procter and Gamble, you're probably not going to have any interest in ARA, and I wouldn't suggest it. But if you're somebody who likes to go to Vegas and you like to roll the dice, I think this is a stock that's starting to look pretty interesting as it pulls back and gets closer to the 20-day moving average. And, you might get it not at the 20-day, and you may not set a target of 13.5. Maybe you just say, you know what, if I get a quick 10% or something on this stock, I'd get back out. This is the type of stock I think that could do that. So that was the today's movers. And then I plan on doing things with earnings reports, economic reports, and so forth. Didn't really get into a whole lot of that today. Number one, there weren't a lot of earnings reports out. You can see I did just mention coming up later this week, in case you own any of these stocks, these are all stocks that have market caps over $1 billion. That was kind of the cutoff I used. Now, as we get closer to earnings season and the earnings reports pick up, if I use $1 billion as the market, the whole report would be, my whole daily market report would be earnings reports. So that level, that threshold will definitely go up as we get into more, heavily into earnings season, because I don't want to list every stock so I'll be putting 300 companies in here for some days in October or into early November. Anyway, I did notice after I sent out the report, I had one thing that I left off that I fully intend to put in here every day, and that is any stocks that we have active alerts I didn't cover. We only have one out there right now, which barely held on, almost got stopped out today on the close. CECO. I call it Cinco de Mayo, just because I can. But CECO, I'll go over and look at this chart. This was a stock that gapped up on some very heavy volume right in here, and you can see the stock. I really think I think that low right here was at 1920. So I believe the 2 entry points, one was 1985, I'm going to say, I think was the initial entry. And I think we had a second entry at 19.25, which brings us to an average entry of 1950 or thereabouts. I believe the closing stop was $19. It went down today to $18.92, but it did manage to come back up and close above. If it closes below 19, do I think that the stock is done forever? No, it's just a matter of managing losses. If it does close below 19 or moves much below where it was today, I think it's probably going to go down to 18. You can see we had a huge earnings move here from the gap. We had closed right around $18, $17.95 to be exact. We gapped up on massive volume, the biggest volume day, and you can see all of these prior moves down to about that level. 1801 was the low here. Over here, 1801 here, 1797. So you're kind of getting the picture. I think if we go much below this 19 level, we're probably going to go all the way back down to 18. And then holding down to 18 really skews your reward to risk. We can keep a fairly tight stop here around 19. Again, intraday, if you want to use intraday, you can. We have a closing stop on it below 19. Hopefully it doesn't go all the way back down to 18 in one day. But the one thing I do like is that as it's been pulling back, the volume for the most part, we've had a couple of decent up days or heavier volume days on down days. But you can see today with the breakdown, the volume was just kind of average, 300,000 shares, which was way below what we had on the way up, 1.5 million here, 1.1 million there. Those were both much bigger volume days. So we'll see whether, what CECO does from here, but it did hold on to the support level. But that is one thing that I do want to include regularly on the daily market report. It just didn't get in there today. That was my bad. One other thing that I wanted to mention that did not get in here, and I'm still debating on how to show it because it's not something that I think we need to talk about every day, and that's the industry group relative strength chart list. And John mentioned the matrix. I'm actually going to meet my daughter Erin on Wednesday. We're going to be talking about that and how we can provide an additional service there that will keep all of our members up to date on what's been moving. I think if you look at the, I'm just going to go ahead and pull up the chart list, which is relative strength sectors, and here's relative strength industries. So here's the industry group relative strength chart list, and here's just the first one. You'll see, by the way, that there are plenty of industry groups on here. There are 104 or 105 in total. And this one is just the computer services index relative to the S&P 500. But you see how on a relative basis, that's the key here. This is not the actual index. Look at the index. The index actually looks like, we made a new high, got higher lows going in. This doesn't look that bad until you compare it to the S&P 500 and you realize that it just continues to move lower. It has lower relative highs, it has lower relative lows, and look what it's been doing the last 2 months, really since mid-July. It's been going straight down relative to the S&P 500. The S&P almost got to a new all-time high. This group didn't come close to where it was previously. So on a relative basis, this group is not performing well. Why is that important? Well, if you own a stock in this group and the group's not performing well and it's underperforming the S&P 500, it's going to make it a lot harder to outperform the S&P 500 by owning a stock within this group. And I don't know what everyone else's goals are. I can tell you my goal with trading is beating the S&P 500. If I can't beat the S&P 500, I should start golfing every day and I should just put all my money into the spider. If I can't beat it, why am I trading? So I think this is an area right here that I would want to avoid. So that's one group. Well, the next group, here's semiconductors. Now look at semiconductors on the other hand. Last 4 months, it's been on fire. It's above the 20-day moving average, 20-week moving average, which is above the 50-week moving average. The PPO, the relative PPO. This is relative PPO, relative momentum. I want relative momentum above zero. Rarely am I going to be excited about any group that's got relative momentum below zero. Because just like a stock, it's telling you that its short-term moving average is below its longer-term moving average. That is generally not a good thing. We want relative momentum to be strong. Semiconductors are showing a lot of strength right now. So I want to be in those types of stocks. Now, I could go through and do this 105 times, and I could post 105 charts for you. But what I can tell you is that if you are an annual member of EarningsBeats, first of all, the strong earnings chart list is always changing. This one, once you have it, never changes unless the index, the various industry groups change its stock charts. You now have the list going forward. So, we don't want someone coming in for a $7 trial and us doing all the work and handing this chart list over. But for those who are willing to subscribe with us for a year and put that kind of commitment into EarningsBeats, this is a chart list that we want to give you. So if you are an extra member or above at Stock Charts, we will send you this chart list. All we do is I go in here, usually it's Erin. She will go in here, and here's the chart list, send to friend, and you put in the user ID of the Stock Charts member. That's why we need your user ID if you want this list. Or if we're sending you the strong earnings chart list, we have to have your user ID. If we send it to an ID, an email address that does not match what Stock Charts you have at Stock Charts, this isn't going to go through. Very, very important that you give us your user ID. If you don't know your user ID, go into your account. On your account, it says right here, user ID. That is what you would want to use, okay? So just make sure that you're checking. That's how you can go in and look. It's not, if you've signed up for something and Stock Charts is sending it to that email address, that doesn't mean that's your user ID. Your user ID has to be what they have on file. And once we have that user ID of yours, we can not only send you this list, but we can also send you a strong earnings chart list. And you can download it right into your account. It's so simple. Really is simple. All right. So if I'm in here, though, let's look at the relative strength chart list, and let's pull up the summary. And I'm just about done. I'll just, maybe 3 or 4 more minutes, John, Aaron. So if you're getting some questions together. But let's look at the summary here. Now, this is telling me the relative performance of what went up today versus what went down. Well, shocking. Here, look at these XLE. All of the energy groups were clearly the relative winners today. Here's an industrial group, though, defense. I know Raytheon got upgraded, but defense saw some performance. So if you're looking at this and you say, wow, and let's just assume you've got this in your account. You're like, wow, okay, let me look at defense, see what's going on. Wow, defense is a great group. I probably should be thinking about owning a defense stock if I don't already own one. And I've talked recently when we pulled back, had a little bit of a pullback. A lot of times that's when you want to be thinking about getting into stocks in this group. So Raytheon, which was upgraded, I'll just pull that chart up real quick over here. And Raytheon, there you can see making a breakout, looking pretty good. On a relative chart, Raytheon, though, strengthening here, moving to about a 2 or 3 month high. But do a little research on the strong earnings chart list, which I'll show you in a minute. You would know that Lockheed Martin has been an even better performer. And probably the best one in the group has been Northrop Grumman, NOC. It's consolidating here, been going sideways for a while. But look at the relative strength here. Huge outperformance. It's pulled back, probably a great opportunity while it consolidates. The next breakout, and it's on the verge, would likely precede another big move in Northrop Grumman. So, again, you can use these lists to become a better trader and be a more informed trader. All right, so let's go back to that relative strength list again. Now, instead of looking at the last day, how about the last month? What's been leading over the last month? Well, aluminum has been pretty hot. Here's another one, XLE, XLP. Now, I'm more interested in aggressive areas of the market. And so I've got materials, energy, consumer staples, materials. Oh, here's one, home improvements. I've written about this group. Look at that breakout on a relative basis and now starting to pull back. And I think if I go over, and I'm going to go ahead and just be done with the relative strength industries. Let's go to that strong earnings chart list. And let me show you something that's pretty cool here. So strong earnings chart list, view all, summary, and home improvements. Well, look at the stock that I have in here from home improvements, BMCH. I mentioned this one not long ago. A couple weeks ago, I said it was a good stock within a good industry group. Look what happened. It actually broke out again, rising off of that 20-day moving average. Look at the relative strength here versus the home improvement. Well, home improvement versus the S&P's going up. Here, this stock versus the S&P's going up. It continues to print higher highs and higher lows versus home improvement. And you can see on an absolute basis, home improvement breaking out. And here's the price chart of the stock. So as it comes back down, the 20-day moving average is a key support level. Also some other key price support levels, mainly gap support, highlighted on this chart. All these annotations, by the way, if you get the chart list sent to you, you get all of these annotations. But that's how quick you can just simply use this information to find trading candidates. So all of this service really works together. And I think, by subscribing and getting into the routine, I think you're going to see that it's going to have a very positive impact on your performance as you go down the road. You're just going to make better decisions. All right. That's basically what I have, John. So
okay.
What else?
Great. There's a couple of questions. Just get a drink of water. And then just give me a minute. I'm going to share my screen. And
I thought
then
I thought this was happy hour. Why am I getting water?
get your Coors Light.
I'm kidding. I'm not getting anything.
Don't go anywhere. Just hold on a second.
All right.
I want to just share. Hold on. I think I can. I'm just going to take the screen away from you, okay?
That's fine. Thief.
I know. I want to point out one thing. Oops, I don't think it's being shared, is it?
Yeah, it is.
Oh, it is? Okay. All right, hold on a minute.
It's on the EarningsBeats.com page.
Yep.
The market report.
All right, hold on a minute. I'm trying to, all right. Okay, so basically, if you take a look at that, I put that up there. That's the sample, right? The sample report.
Mm-hmm. Yep.
I wanted to point that out because I know there's some people who are maybe on the fence or wondering. You can go right to EarningsBeats.com and you can get a sample of the daily market report. So everything Tom went over, there's a lot he was covering. You can actually go get a sample of that, take a look at it. And like I said, if you sign up for that today, I'll give you till tomorrow. We'll add the 2 weeks, and that 2 weeks could be substantial because we're going to have that EarningsBeats the Q3 earnings webinar on the 21st of October, and that's something you want to get involved in. So I want to point that out, that you can actually see a sample of the report. And the other thing I wanted to do, hold on a second, is I want to mention, I seem to have lost my sharing capability here, Tom.
Yeah, it's not sharing right now.
Yeah. Can you stop sharing?
You had it. You had the screen.
Yeah. Okay. Hold on a second.
I'm not sharing right now.
Let me try one more time. I'm just not getting any. I've lost control of this thing. Go to the website, EarningsBeats.com. You're going to see a midnight special, like a happy hour special. That'll be your best deal. I guarantee it. You get a full year of service, which gets you 4 quarters of the top 10 stock picks that Tom will be doing. The next one will be November 19th. And then you're also going to get 4 earnings season webinars as well. And that next one will be October 21st. That's your best deal by far. Sign up by tomorrow and you get an extra month. All right, we got a couple questions.
Okay. Yeah, I put it up on the screen, by the way. I went to the
okay. Yeah.
So EarningsBeats.com right here, this happy hour special. Click on it and it'll bring this form up. And so this is what John was referring to. Now,
Tom, can you see the open questions? If not, I'm going to read them to you. There's only 7.
I can.
Here's the first one. It's recent email. See if you can follow this one. Recent email indicated relative strength was a confirmative signal. What primary signals do you advocate? How do you use them? Do you look at a 3, 6 month, 1 year, daily, weekly chart? And also, this comes up a lot. You buy and hold for the 3 portfolios and timing with technical analysis for your alerts. Do you have stops, etc.? And I try to let people know that the top 10 stock picks, there are no stops. You run the full 90 days. But the question really has to do with relative strength, confirmative signal, and what do you advocate?
Well, I think when I went through today's daily market report, I mean, I kind of talked about the things that I look for. To me, the most important thing is price, the price action, price and volume. So relative strength is awesome because it gives me an indication of where Wall Street, what areas Wall Street's favoring. If a group like, I pointed out defense, if that relative strength line is going up with defense relative to the S&P 500, and I happen to find a stock, and I'll go ahead and let me just pull up, what was the Northrop Grumman? Let me pull up Northrop Grumman again. So if you notice, a few days ago, Northrop Grumman went down and printed a hammer. And I just said price is probably the most important thing. So when you print a hammer like that, right on major price support, we had a breakout here. We had a breakout. came back down, hit the 20-day, didn't quite get the price support, hit that 20-day moving average and bounced. And then as we were consolidating here, we failed to get back through the prior highs, bearish engulfing candle right here on the top, by the way, and then came down, and it looked like we were breaking down intraday. So most traders wouldn't touch that. During the day, that would have been a big red candle. So a lot of times when you get these reversing candles like that, a hammer off of a downtrend at a price support level, that's a great entry point. And what I was referring to is, let me go ahead and save this. Let me just put it somewhere. So if I just save this chart and then I show it, or I pull up the relative chart, this is where I talk about it being more of confirming. So now I already like the stock. Let's say I looked at it and it had this hammer. It's right on price support. It looks really good. I would be looking at the performance of the group and looking at this. I can still hear you, John. I don't know if I don't think you're muted. But I can see here on this move back to the upside that I've got a group that's actually leading the S&P 500. Even here, I didn't break back down below the prior breakout level. So it's okay on a relative chart, just like it's okay on a price chart, for them to pull back for a period of time. You know, you get overbought on a relative basis, just like you get overbought on an absolute basis. So I think being in these strong groups and knowing which groups are strong, that's that confirming signal that I was talking about in terms of industry group. But I'm not going to say, well, I like defense, therefore I'm going to buy Northrop Grumman. That's not the way. I use it the other way. I want to take a look at the stocks that are on my strong earnings chart list, and when they hit a key support level, to me, being in a strong industry group is just one more reason to buy. Hopefully that answers that.
Okay, we're going to just do a couple more. And I want to mention, if we don't get your question, you can just go to the website where it says contact us and go ahead and send your question. We'll get to it. Here's a question about the three portfolios. ENPH and Starbucks have been declining very much from entry point of August 19th. I'm wondering if we could put stop loss or stay out on the sideline.
Well, again, these are portfolio stocks. That has not been part of the process, using stop losses in the portfolio. You're holding 90 days with the idea that the stocks that outperform to the upside they're going to do more good to your portfolio than the ones that break down do harm. That's been the whole idea for the last year. And I did just update the model portfolio, and year to date, well, not year to date, but since inception, which was November 19th of last year, the model portfolio is still up 46.96%. The S&P 500 is up 11.42%. So right now, by the way, in the current quarter, all three of the portfolios are below the S&P 500. And I think it would be a big mistake, and it would be setting the bar way too high to think that these portfolios are going to outperform every day, every week, every month, every quarter, and every year. That's not the way the market works, and certainly these stocks are not to be expected to outperform all the time. But just like, yes, ENPH having a very, very rough time of late, I actually think it's holding where it needs to hold, which is gap support from the earnings. And I can just go ahead and pull that chart up for you so we can take a look at that while I'm talking about it. I had a member write into me and ask me about ENPH when it was breaking down below this support area, and I just said simply, I'm not putting stops in. Maybe I will at some point down the road, but I am not currently putting stops in on portfolio stocks. Now, that doesn't mean that you can't. Anybody out there that wants to, participate in these portfolios and says, hey, you know what? I like the portfolios. I like the concept, but I don't like the idea of losing more than 10%. Put a 10% stop in, a trailing stop. In this case, it would have been perfect. I mean, you'd have been up 35. You'd have been stopped out probably around 31.5, and you wouldn't have suffered through all this downside. But let me show you a different stock, which I showed you just a little bit ago. EverQuote, which is one that's in the list. If you had had that same mentality at 24, you'd have gotten stopped out at 21.60, and the stock's at 24.73 today. So my point is, when you're into these stocks that are leaders, and you can see EverQuote, one of the leaders in the internet space, Internet stocks love this time of year. And this EverQuote's one of the best stocks out there right now. So here you've gotten stopped out. You've been kicking yourself. So the whole idea is I'm getting into 10 stocks. And you know what? If Enphase goes down 30%, it's not taking your portfolio down 30%. Enphase is only 10% of the portfolio. 10% of 30% is 3%. So yes, it will hit your portfolio 3% if it's down 30%. I think that's manageable, especially if I have another stock that might be up 30% or 40%. That's the whole idea and the theory behind it. So I'm not at this point in time, what I've said is if something's not broken, don't try to fix it. And right now, these portfolios have all outperformed. They are all up since their inception. They're up quite a bit since their inception. And none of them include dividend yields. The portfolios do not include dividend performance, which is really important when you look at the income portfolio. The S&P 500, the benchmark, is a total return index. It includes dividends. So that's another thing you got to take into account. These portfolios have been doing very well, even though, granted, and admittedly, they have not been strong the last 2 weeks, but they have started to turn back around. The aggressive portfolio has started to perform pretty well here over the last 3 or 4 or 5 trading sessions.
All right, just the last couple questions here, sort of connected. So I'm going to give you a little multiple part question. Number one, would you be willing to send us, being members, the coding for your scans? And then, is there a way to use the scan workbench to sort on the relative strength industries chart list?
Say that last one again. Is there a way to what?
Use the scan workbench to sort on the relative strength industries chart list.
I don't think you can use that. I think I've tried to do that before. I don't think you can scan against the chart list. But again, the matrix that I'm going to be coming up with, you're not going to need to. I will be showing you movers in there, and not just like 1 week to the next, but literally I'm going to try to keep track and be showing you the groups that have been moving over, say, the last month. And you can do that really just by going into the relative strength industries and selecting view all, summary, and then going over here and changing the period. Do you want to know what's been doing the best versus the S&P 500 over the last 6 months? It's the renewable energy space. I could have told you that without even looking at it. And then you've got an insurance group here. You've got defense, the third best group over the last 6 months, home improvements, and down and so forth down the line. You want to do the last 3 months? There you go. There's your 3 month look. How about 1 month? There's 1 month. So there are ways that you can use these chart lists that you don't need to run scans. I'm not sure what specific scans you'd be looking to run, but my guess is that maybe, if you're looking for one that's got a positive PPO and maybe is testing its 20-week moving average, that would be nice to know. But I think that was one I was trying to run and I couldn't get it to run. So the answer to the second part of the question is no, I don't think you can do that. As far as me giving you the code, you have no idea how easy my scans are. I don't get sophisticated with my scans. So literally, let me show you what I did to create my scans. So the first one, the RSI 40 to 50 for my strong earnings. If I run this scan, that's not what I wanted. I wanted to edit the scan. Let me go back there. Let's edit scan. Okay, so there it is. For the last intraday update, strong earnings stocks. So I've used the group strong earnings chart list. So if you have this chart list, all you have to do is pick it as a global filter. And then as you go down here, I've got volume and price. I don't even really need to do that because I'm already using my strong earnings chart list as a filter. So I really don't need to filter even further. And in fact, I switched this. I just recently switched this to any. So it doesn't even look at that anymore. The only thing I've done down here is I've just gone RSI greater than 40 and RSI less than 45 because in an uptrending stock, pullbacks that leave an RSI on a stock between 40 and 45 many times will be a great entry point. A lot of times you'll be hitting price support or a 50-day moving average or a trend line, or it's just normally pulling back, and many times is poised for another move to the upside. So that's my RSI pullback scan that I use. The other one I use, high volume. Now this one is as of 10 a.m. If I edit this scan, again, global filters. Well, that's actually, I don't know why it's on that. That's weird. But I would normally go in here and I would switch it, make sure it's on strong earnings chart list, update criteria. Now I'm going to save it. I don't know why the other one was in there to begin with. So now it's the strong earnings chart list, and the daily volume today is greater than the 90-day simple moving average of volume times 40%. And so you're like, well, why 40%? Well, if I do this at 10 o'clock in the morning, that's only a half hour of market action. Most stocks probably in their first half hour don't trade more than about 10 to 15% of their daily volume. So if I've got stocks already trading 40% in their first 30 minutes, that's a stock that maybe I want to be thinking about looking at. Now that's, again, if I ran that scan right now, probably 329 stocks would come up. Let's just do it for fun. 321 stocks. So 8 of the stocks on the chart list did not meet their 40%. That's very low volume. Just about everything on the list did that. But what if I switch this? Now, let's say for the day, let's change this to 2.5 times, because now we've had a full day. So now the daily volume's got to be at least 2.5 times. So I update criteria. I'm not going to save this because I don't want to save it. But now I have updated my criteria. You can see now the volume's got to be. So now let's run it against the strong earnings chart list for the day, but using 2.5 times, and there were only 3 stocks that met that criteria out of 329. So again, that was a pretty easy scan. And then my other scan is this 52-week high strong earnings chart list. And this one comes up a little bit different. Who knows why? The advanced editor is on this one. So, but it's still the same thing. You're going down here to predefined list. So I've got the strong earnings chart list typed in. And that was just added by looking at chart lists. So in this case, if you're using the advanced, you just come down here, click on it, and then add. I've already added it, so I don't need to add it again. There it is right there. So, and then this is just all basic stuff that comes up, I think, kind of default. One last thing I'll tell you about, and the way I do this sometimes, is let's say that there's a predefined scan that you really like over here. Here's strong volume gainers. I don't know how that's set up, but you can click there. Do you see what I just did there? I pulled it up, and then I click here to edit this scan. So now stock daily volume is greater than yesterday's daily times 4. Wow, that's a huge volume increase. But if I wanted to customize this, look at what I could do to it. I could just go down here to my chart list and say, I want to run this scan against my strong earnings chart list. So I add that, check my syntax. You can see it now, it's up here. There's my favorites list. And I can just run the scan. Didn't come up with any because it's 4 times. I didn't have any, the volume wasn't strong enough. Maybe I could go back and lower that to 2 times. Let's see what happens there. Oops, let's go back here. Find it here in a minute. There we go. So let's make this times 1.5. Do I have a point in there? 1.5. Okay. And so let's check the syntax here. Oops, I don't want 11.5. I want 1.5. Let's try that again. And then run scan. I think it came up over here. Yeah, now there's 16 of them that came in more than 1.5. And I can sort it by scooter. So some of the best stocks in here, there's EverQuote, Lockheed Martin, Harris, Chipotle, and so forth right down the line. So anyway, that's another way that you can take these predefined scans and then simply customize it to your liking. Very, very easy. That's generally what I do. Trying to go back and okay, but I could do this with any of these stocks. You know, if you're a Bollinger Band person, 529 moved above the upper Bollinger Band. Well, go ahead and apply that to the strong earnings chart list. You can take any of these, you know, and apply them. You can go down here to the candles, bullish reversing patterns, bearish engulfing. Go ahead and pull that up. Click here to edit the scan, add strong earnings chart list. Maybe you're like, okay, I want to see if there are tops on any of my stocks. That's something you could run. So anyway, lots of different things you can do there. But anyway, I hope that answered the question. Another long answer.
And that'll wrap it up on that one. I want to thank everybody for stopping by. Again, I'll make sure everybody gets a copy of the recording of this session by tomorrow. And I'll include in there any specials we have to make sure you are able to take advantage of them. Tom, great job. And we'll let everybody know when our next event is ready to come up. Thanks.
Yeah, and I'd love to get feedback too, by the way. So anybody who saw today's daily market report, you know, that was the first one. I think I did one on Friday that I posted in my Trading Places blog that was kind of similar to today. This one was a little bit different. But anyway, I'd love to get feedback on what you thought of it, whether it helped, you know, if you think that this is something that's going to help in your trading going forward. But it is something that'll be coming out every day for our members. So looking forward to it.
Great.
Glad to be back. Cheers to everybody.
Yeah.
Looking forward to EarningsBeats as we go forward. Just please have some patience with us. We are going to be changing some things on our website. The services are going to continue to evolve. So, there may be a little lack of consistency from day to day, like the timing. As I said, it went out a little late today. So I have some patience there, but I think overall, I really like where we're headed, and I'd love to get feedback and see what you all think. So with that, everybody have a great night. Cheers, bottoms up, and to another market day tomorrow. We'll be back and let you know what's going on. Take care.